Trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. Please contact your account representative for more information on these risks. Past performance is not indicative of future results. If you like grain markets and other stuff, you've come to the right place. Welcome to the Grain Markets and Other Stuff podcast. Here's your host, Joe Baklovic.
Hey everybody, welcome back to the Grain Markets and Other Stuff podcast. Thank you for joining me. Remember, if you have not already subscribed to the podcast, we've got a lot of outlets out there. Your normal Apple Podcast, Google Podcast, Spotify. The YouTube channel is up and running. It's being updated with content every day. So everything I'm doing is now also available in video form. So certainly check that out as well. Leave me a review. Leave me a comment on the YouTube page with any questions or concerns, anything that you might have. Remember, if you need some help with your grain marketing, go to my website. Go to standardgrain.com. Click on Grain Marketing Plan. Check out that subscription service. It's $49 a month. You can cancel it at any time. I'll let you know exactly what I'm doing. Hope everybody had a nice weekend. I know a lot of you who are watching and listening were probably busy. I know harvest is in full swing in a lot of parts of the country. I was on the lake, and that's where you'll find me more often during planting and also during harvest. I have a little bit more free time in those periods of the year, as you could imagine. We had a good fishing tournament on Nickajack Lake, which is down in eastern Tennessee, kind of around Chattanooga area. I did not win. I came in second place in our club tournament, which was still a good finish. I could never get the big fish. I caught a lot of fish, couldn't get the big fish, and came in second, lost by a few pounds. So it happens, but good tournament, fun weekend. I think I'm still recovering. Those days of basically 2 days, they're about 10 hours of fishing, plus you're basically up about 4 in the morning getting things ready, and by the time you're done at night at 6 o'clock, it's a long day. It's tiring. It beats me out, and then all the traveling as well. I wanted to do this episode on USDA reports today. How I handle USDA reports, and more specifically how I handle USDA reports in regard to grain marketing. I think that I probably have a school of thought that is not necessarily the same school of thought that everybody has, but I'm going to tell you what I do. I feel like I probably spend less time and less energy focusing on these reports than maybe some other people do. And I'm not saying that that's a good thing or a bad thing. I'm just saying that that's how I do it. I don't spend any time really trying to guess what the yield's going to be or what the demand number's going to be, or putting together theoretical versions of the balance sheets for my own use. I don't spend any time doing that. And the reason that I don't spend any time doing that is because I don't believe that I can personally predict what USDA is going to say, and I feel like attempting to predict what USDA may say or may not say will probably get me in trouble more than it will help me. And you see in these reports, month after month after month, the trade misses things all the time. They miss acreage numbers, they miss yield numbers, they miss demand numbers, they miss quarterly stocks numbers. We've got a quarterly stocks report tomorrow. I just feel like it's kind of an exercise in futility for me personally, from where I sit, and this is not the same for everybody, but from where I sit, I feel like it's a waste of my time to focus too much on trying to predict what USDA is going to say, trying to predict what these balance sheets may look like. I think I'm better at reacting to situations rather than trying to predict what may happen in the future. I feel like that's my strength. I feel like if I try to predict what's going to happen, that's going to make me ultimately weaker. Anything can move the markets. So USDA reports do present an element of risk in these markets. There's always the potential for USDA to come out of nowhere with some sort of number that shocks the trade and results in a sharply lower trade, sharply higher trade, or a change in the dynamic in the marketplace. That's very possible. But there are a lot of things that can do that, and they could happen on any day. Weather, politics, currency movements, all sorts of different factors contribute to price. USDA and what they say is not the only one. And if you look at these reports, I would venture to say that the majority of them are not big market movers. The majority of them kind of come in as expected. We'll see a little bit of volatility around report time, but they're not big trend changers. They don't really change the dynamic of the market. Every once in a while, you'll get that. But I don't feel like these reports necessarily present as much risk in all cases as some people might lead you to believe. I don't think that you need to go into every report being hedged just because we've got a report coming. Some people will say, oh, well, we've got to buy some put options because we've got a report. You can't do that every month. It's not going to work out over time, in my opinion, or at least in my experience. I think if you were to go into every report and say, I've got to buy a bunch of corn puts and a bunch of bean puts for the report, I don't know if that's necessarily the best strategy. Grand scheme of things, because again, you do have risk associated with these reports. Certainly, there's always risk, but there are so many other elements that present similar risk. Again, weather, politics, currency movements, all sorts of different things. USDA is not the only thing. I wrote down a question for my next point. Do I think that USDA is right? You hear a lot of comments like USDA is wrong, USDA killed the market, USDA is their methodology is flawed, and all of those things may very well be true. So do I think USDA is right? I guess my answer to that is I don't really care. It's the best data we have available. There may be a point in time where one of these big tech companies comes out with data that is ultimately better than what USDA has. But for right now, USDA is the gold standard for data. It's the hand that you will be dealt every month is this USDA report, and you have to play that hand that you're dealt the best in the best way that you can. So is USDA wrong about certain things? I'm sure that they are. Have they been wrong about the size of the crop or the acreage in a certain state or anything along those lines in the past? I'm sure that they have been. Will they be wrong in the future? I'm sure there will be instances where they are wrong in the future. But fighting the USDA, trying to disagree with these numbers and then make decisions based off of it is not a winning strategy, in my opinion. I don't think that that's something that's going to get you real far. So my last question here that I kind of wrote to myself to answer: do I hedge USDA reports? Do I get concerned about them at all? In some instances, yes. There are instances where I will look at a market and I'll say, you know what, we've got a report coming up, and this is a scenario where I think there's a lot of risk. And for that scenario to occur, it goes back to a point that I've made in a lot of these podcasts, that I want to see a bunch of my boxes checked when it comes to grain marketing. I want to see the funds long. I want to see an up market. I want to see maybe some multi-week or multi-month highs. I want to see some bullish sentiment. And if all of those things are intact and we've got a USDA report coming up, then yeah, I guess I'm interested in either making some sales before the report or maybe putting on some sort of hedge position for the report, depending on the customer and the particular situation. But I don't think that it's been good in my experience to hedge ahead of a report just because there's a report. I think that you want to see a lot of other things line up for you to get excited about hedging or doing marketing ahead of a report just because we have that report coming. I don't think that, a report, say in a down market, if corn's been trending lower and the funds have been short for months and months, am I really that interested in making sales and putting a bunch of hedges on before the report? I'm probably not. Now, in the opposite scenario, if we have rallied into a report sharply and we've got a bull market intact and a bunch of my boxes are checked here, we've got a fund long, bullish sentiment, multi-week, multi-month highs, that sort of stuff, then yeah, I'm a lot more interested in hedging, whether it be some sort of option strategy or selling cash or whatever, protecting the downside in some way, shape, or form. But in general, I'm not going to do it just because there's a report. If you have any questions about how I handle USDA reports or how you think you should handle USDA reports, shoot me an email to info@standardgrain. standardgrain.com. You can hit me up on Twitter. My Twitter handle is @standardgrain. You can leave a comment in the YouTube video here, and I will respond to it. But I'd be curious to see what you think. That's how I handle it. I figured I'd kind of run through this because we have this report coming up tomorrow, and we've got another bigger one on October 9th that a lot of people will talk about, and USDA is going to change the yield and the production numbers and all that stuff. But I figured I would kind of let you know what I was thinking. Everyone have a great day. I'll catch you same time tomorrow morning, I guess.